The goods and service tax in India is one of the greatest tax reforms that we will have seen. It is a monumental tax reform, as the finance minister has acknowledged. Industry leaders, experts, all of them have acknowledged that it is going to be the greatest ever tax reform. In substance, it will change the way we think of our business. It will change the way we have to operate. It will change the profitability. It will change the top line and cash flows. So when it comes to how one should really approach its entire implementation into the business, I would say this. The first and the foremost would be to set up a committee, a GST committee, a steering committee, a monitoring committee, call it what we want. But it should comprise of all the business decision makers. In decision makers, I would mean sales and marketing, procurement, production, warehousing, finance, legal, and of course, the information technology bit. The next, once we set up this committee, the next step would be to identify all the impact areas for our business. By impact areas, I would mean all those aspects, all those transactions, all those things that we do in business which will be impacted because of GST. As I said, GST is going to be the greatest ever tax reform. It will touch every transaction, it will touch every businessman, it will touch every business. So it should, if we take it as for a manufacturing entity, it would ideally include the location. The location where the factory is currently situated may not be the right location under the GST. The set of assumptions that we had made, the set of business parameters that we had laid down to decide that the factory should be located in such a jurisdiction may not be relevant under the GST law. Pricing. The tax rates is expected to be something around 22 to 24%. It will change the pricing, both procurement as well as the supply side. So it calls for a relook at the pricing as well, if we have to stay relevant in business. Inventory management. The kind of inventory policies that we have today may not be the most appropriate under the GST regime. The supply chain that we are operating in, the hub and the spoke model, the number of warehouses that we have, the number of showrooms that we have, the kind of distribution channel that we have, will need a relook under the GST regime. For a couple of very simple reasons. Today, under the current tax structure, stock transfer suffers a disallowance under the VAT law, under the state level VAT laws. That will not be so under the GST regime. CST, that is paid at the point of procurement, is not allowed as a credit today. Going forward, IGST will be allowed as a credit. The credits are expected to be seamless and with minimal restrictions. So it will impact the working capital as well. Manufacturing, again, when we come to today there is a very high reliance on ERPs. So ERP is something which has to change. The way the accounting happens, the way the records are going to be maintained, the way the computations are going to happen, the way we acknowledge receipt of goods or dispatch of goods, and the way the records are maintained, all this has to change. Very simply put, an invoice that is going to be issued under the GST law also will be different from what it is today. Once we identify these impact areas, which is pricing, supply chain for a manufacturing entity, pricing, supply chain, the location in which we are going to operate, the distribution channel that we are going to have, it is time. The next step would be to simulate all these by looking at the GST law. Each of the options that we've identified, each of the impact areas that we've identified has to be simulated to see its impact because of GST. What will happen if I operate through 6 warehouses in these jurisdictions instead of 4 that I have today? What will happen if I have a centralized warehouse in one location across the country? What will happen if I change from a buy and sell model to a commission model? All these have to be simulated. That will be the basis for decision making and documenting the decision. The decision making will have to be done keeping in mind the entire benefits that we are talking, which comes along with GST. The time that is going to be involved, the efforts that are going to be involved to implement that in our business if we have to stay relevant. Once the decision is made, once the decision is documented, the next most important aspect will be to do a detailed implementation step plan. Like any other plan on the strategic side, this has to include the protocols, the communication that we are going to follow, the external and as well as the internal communication, how are we going to manage how are we going to do the knowledge management with it. And most important in this plan will be when are we going to start implementing, the timing of implementation, along with the consequential reporting and the monitoring. Once we have the plan in place, once we have decided when to implement, the next important thing will be, the next step would be to implement it. Implementation would involve price negotiations, agreements, relook at those agreements for addendums or renegotiations or cancellation and entering into fresh agreements, communication of the pricing, both as far as the procurement and the supply side, the documentation that is required in the business, the accounting policies, the knowledge management part, which would ideally start with how do I be aware of what are the changes that are happening? How do I communicate this to the team? How do I communicate this to internal as well as the external teams, with my customers, to my vendors? All these all this which has been a part of the implementation step plan has to start seeing the light. It doesn't stop here. Once we implement, there are two other things which are very critical in any business. One is to ensure the compliances fall in place. We have mapped the manpower, existing or additional, to the compliances that will trigger because of GST, as also the compliances which have to continue for the old laws. The monitoring mechanism, the reporting mechanism there too, and the last of the steps in an approach to implement GST for a business would be a review. Review is critical for a simple reason that there would have been a whole lot of assumptions that we would have made as part of the decision. We have to revalidate those assumptions. We have to do a reality check to see if those assumptions are still valid, if it needs relook, and correspondingly to make any other changes in the plan or the implementation that we have done because of the change in the business situation or the cycle that we are operating. As I said, GST is not something which is a mere change in law or a simple change in the rate of tax or requiring additional compliances. It is not something which can be viewed as how the service tax changed a couple of years back, 2012 to be precise. It changed from a selective principle of taxation to a negative list-based taxation. In 2004, service tax and central excise came together to give us cross-sectoral credits as semi-credit rules. GST is not as simple as those two. So, there are not going to be out-of-the-box or ready-made solutions for implementation of GST. It will be specific to the business that we are operating in. It will be specific to the scale at which we operate. It will be specific to the geographies in which we operate, which will form a very important parameter in the process of decision